Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously, create dozens of quick lists, display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Friday, August 28, 2015. We're going to take out the free trial board there. So the question bar will be open, folks. If ever you have any questions, feel free to ask them. Today we have markets that remain really calm. If we take a look at this situation here on the SPY, we're still stuck within this big important sideways formation on all indices. So it's really a situation where there's almost nothing to be done, right? Except for some sectors, though. We had a really nice performance among energy stocks, some on the mining sector, but not as active. Really, it has been the energy sector that has been the leader today in terms of day trading. Now, right now, the energy sector on the Canadian side, just like oil, which is pursuing its rally after after reversing its downward trend yesterday, well, we have the energy sector that is reaching its target of 180. This is the point where we could expect a potential pause. So therefore, make sure that you take some profit in your energy positions. Do not hold on to them overnight. Now, I've mentioned yesterday, I also made a chronicle yesterday saying that those of you who would like to buy some energy stocks, look at the moving average. Favor stocks that yesterday were at least staying above their 10-day moving average. For instance, CNQ, Canadian Natural Resources, yesterday was above its 10-day moving average. Today the rally continues. You know that at $30, this is maximum the point where you're going to have to take some profit on CNQ. So $30 is the point to take some profit if you bought CNQ yesterday. Painted Pony Petroleum, we have already reached the 30-day moving average. I doubt that we could go higher to reach 687 because at a certain point when the energy sector is not going up as much and when markets are all staying neutral, I really doubt that there could be a wave of buyers that could bring the sector further back up. So it's really a situation where I think you should continue to hold on to your positions and take some profits when you can on some positions that you have already open. Now, there's one question here from Stefan. It's a question about WGA, WestJet Airlines. So, hi Chris, is there a cup and handle formation on WestJet Airlines? Well, it's a nice question, Stefan. It's not a technical pattern that we talked a lot, but this is what is a cup and handle formation. So let's say that the stock goes up here, okay? Now after that we have a drop. the stock goes back up again, and then we have a drop, and it goes back up again. So this is the cup, as you can see here, and this corresponds to resistance. So whenever we get out of this resistance, we break out this resistance, this is really bullish. Now, as for WestJet, okay, we had this first branch. This one here, that corresponds to this trend. We had a drop. Now, the rally that we had here is not enough to determine is there going to be a cup, right? Because so far, this rally has not bring us towards this resistance of 27.87. So I cannot say that we're starting to have that, because nothing says that this rally here will be short-lived and we might go further down. So until WestJet Airlines doesn't test 27.50, stabilize there, I cannot confirm that there's a cup and handle formation. But you're right, we are actually at those level here on WestJet Airlines, and if ever we can stabilize at 27.50, go back down again and go back up and break 27.50, then that would be a clear break of that resistance, and that would be a clear go on a stock like WestJet Airlines. So nice call for this cup and handle information. I'm sure there's some viewers that have learned something new, but it's not yet confirmed the cup and handle technical pattern on WestJet Airlines. Now Travis has a question here. If there is a buyer and seller and vice versa, why does volume not stay neutral? How do you tell buying volume from selling volume? I appreciate your answer. Well, mostly I don't. In terms of volume, you know, there's what's called high frequency trading too, where in terms of volume, even if we can have a lot of high volume, high frequency traders, what they do is that they buy and sell. And really, so in terms, they can be heightened volume, but the fact that they buy and sell and the bid and ask is so tight that sometimes the market can stay neutral. So it's not, it's mostly due to how the high frequency traders, I think this is why we can have high volume, but the stock stays neutral. Now, how do I differentiate from a buying or selling volume? Well, it's not something I look at a lot. Let's take a look at a stock, for instance. Let's take a look at a stock like Rex Energy. What I do is that when I put my the software market vision, how do I determine if a stock is a buying volume? Well, let's get back in the next segment for the end of the explanation. Buying volume. Well, for instance, I take a look at this. For instance, here on Rex Energy. So the stock went up today. What did the volume go? The volume went up. So for me, that is a clear buying pressure. Now, there's no way to determine if this is buying or selling volume. I think by looking at when it's green, it shows that there's more buyers. When it's red, there's more sellers. That's how our market vision software is structured. So for instance, here, when you saw that the volume was red, that means that at those levels, there were more people selling than people buying, and this is why we had the stock that went down. So for me, I think what you could use is to use the market vision software, use the intraday chart. The green ones are the ones that determines the buyers, the red ones are the ones that determine the sellers, and I think it's a way that you can use that to take a look at which volume represents the buyers, which volume represents the sellers. Now, how can the market stays neutral when we have a high volume? As I said, is with the high frequency traders, usually in terms they can buy a lot, sell a lot at tiny price, tiny bid-ask spreads, that usually we have heightened volume, but the stock just doesn't move. So that's one of the reasons that could explain why we have that. I hope I've answered your question, Travis. I'm not sure if it was if your question was really well mentioned, but if I didn't answer your question well, don't hesitate, of course, to specify or a particular area you would like me to develop on. Now, what is the difference between ex-dividend date and record date? Do you still get paid dividend if you sell before the record date? If I remember right, ex-dividend date, you cannot, when you buy a stock at the ex-dividend date, you do not have access, you're not allowed to get paid the dividend that's going to come after. The record date is to say, well, okay, let's say the ex-dividend date is on August 28th. On August 21st, it's going to be the record date. So on August 21st, the company is going to say, okay, those are all the shareholders that we have that have access to the dividend. If on August 28 you don't have the shares, you won't get paid the next dividend. So the record date always comes before the ex-dividend date. The ex-dividend date is the critical date where you have to hold the shares before the ex-dividend date, because if you don't, you won't get access to the next dividend. So that's the way that you can understand that. Record date is before, ex-dividend date is a threshold point. Before you have, if you have the stock before the ex-dividend date, you have access to the dividend. If not, you don't have access to the dividend payment. So that's the way to look at it. Now is it a good time to buy Dollarama? Now Dollarama, if we take a look at this stock here, is it a good time to buy Dollarama? Well, Dollarama, Justin, is pretty neutral. The stock is confirming a negative top with the stochastics. This is something I don't like. It's testing its upward trend there, which it reversed around here, finally, after we had a pullback. So for me, under those conditions, Dollarama, I find it kind of risky. I know they're going to release their dividend soon, so you might be bullish on that stock, but so far, the technical indicators are not so bullish. We have weakening volume on that stock. The wave of buyers is not there because you see that we're confirming a negative top on the stochastics. Histogram is good though, but so far we are not seeing a wave of buyers that could bring the stock towards $78, which will be a clear breakout. Now, if you want to get in Dollarama because you're betting that their results are going to be good, that they're going to make some money, well, I think that the only thing is that you should respect your exit point, which means if it goes below $75, you close that positions. By buying right now and putting your exit point at $75, your loss potential is not that great, which is a good thing. But you see, if we go below $75, which corresponds also to that support and also to the 100-day moving average in black, the next stop could be $67.50. So this is why it's important to put your exit point at $75 on a stock like Dollarama. And even if by looking at the technical indicators, I see nothing that allows me to say that there's a wave of buyers that is coming in on a stock like that. If you have a personal view on Dollarama, you've made your research on this, you like what this company does, well, I think if you're buying today, just make sure you exit at $75. It's all about risk management if you're buying a stock like that, even if it's a solid company that continues to maintain its upward trend on a yearly basis. So we're going to get back in the next segment. We're going to do some news, and after we're going to take a look at the other questions.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. One reason that could explain why we have markets that remain neutral is because the speeches by the Fed members today have been a speech where none of them could give us any clue. We had Mr. Dudley, the chairman of the New York Fed, that talked that said that the Fed is going to be data dependent, that possibly that we might not raise interest rate. Today we had the St. Louis Fed chairman that says that that no matter what happened in the markets, though, that we're going to keep track with our policy, and if ever we have to raise interest in September, we're going to do it. That the recent market volatility is not going to impact that much our objective of raising interest rate. So we have those kind of mixed signals. So this is why I think that markets right now, the investors' appetite for buying is actually is starting to slightly fade. We have a clear neutral formation on all indices though so far. Now, also, the thing is, there was one question from Jack yesterday about ERX. The energy sector was the sector to buy yesterday. Now, there were a lot of stocks in the energy sector. Now, if you want to buy ERX, though, look, as I said, it's always with the moving average that I'm giving myself some targets. You see the next target on ERX is around 36.71 if you're buying today. However, the thing is, by looking at the energy sector in the US, we see that the energy sector is close to test its downward trend. So right now we're at 551, and the downward trend corresponds to 563. So there's about 10 points to be gained. So will those 10 points be enough to allow you to make some money quickly on ERX before it tests this downward trend? So far, it all depends, though, because it's not because the energy sector in the US moves by 10 points that ERX will also move by to reach 36, right? So this is the risk that I find right now. It's a second day movement if you're getting in today on a stock like ERX, but if you got in yesterday, right now you're in a clear situation to at least take some profit. That's the strategy of the day. Continue to take some profit on most of your positions where you can do so, because markets are totally neutral. Now, if we take a look at, there was one, thank you, Bear, for this statement. Hi, Chris, may you and Decision Plus team have a great weekend. You all deserve it. Thanks for keeping us on track. It's our pleasure, Bear. The team also appreciates the fact that you've mentioned that, and the fact that we keep you on track and help you improve. It's our pay, right? And we definitely love it. Now, as for the day trade of the day, folks, it's MPO. MPO in the energy sector. I know the stock is losing some momentum right now, but the stock was so active, though, really on a surge of 131%. We recommended that stock and MarketGurus.tv around this area here towards 1055 on MarketGurus.tv. So definitely you had the probability to make some money on that stock. Now 544 is going to be the new entry point on a stock like that. I would not hold it overnight. It's a stock that, by reading another article, I think it was at a certain point they were planning of delisting this company. Now, of course, with the surge in oil prices, small companies like that, there are some buyers who are stepping in, but I would not hold it overnight. There have been also other stocks such as Rex Energy that gave one entry point here, another one there. Now it's overbought. I think that it's going to stay there because we have a negative top on the stochastics. So 325 is going to be the new go on a stock like that. And Warren Resources also has been good, but Warren Resources only higher than 51 cents that the stock is going to be good for an entry point. So today it's a moment to stay on the sideline, I believe. Right now we have markets that are calm, stay neutral. There's still a probability that we might continue to go up, but really it's not likely to happen today because, as I said, the members of the Fed so far have given us statements where it's not clear what they're going to do, so they give us almost no clue. And in terms of this, the banks today, there's one bank on the Canadian side that released their earnings. It's Bank of Nova Scotia. They did their earnings in line with estimates, and so far the stock is having a slight correction. So we're going to release today on our Facebook page and on MarketGurus.tv the earnings summary of our banks. Most of our banks have done pretty well, either in line with estimates or they beat estimates. So really the decline in oil prices has not impacted them that much because they had strong profit from retail, from wholesale banking, and this have actually been able to show that our banks continue to remain strong. So financial stocks, though, I still think that it's a sector where those of you who have a medium to long-term horizon should definitely get an exposure to on the Canadian side. So that's it, folks. I wish you all a great weekend. See you next week on DecisionPlus.com.